Good afternoon and welcome to NYFP. The rally continues on Wall Street with the equity averages all higher by 1%. Joining me this afternoon is Sandra Navidi at Beyond Global. Good afternoon, Sandra. Thanks for joining me.
Thank you for having me, Remy.
Well, we are seeing a global relief rally on Bernanke's dovish comments yesterday. We did get Bernanke's speech after the market closed yesterday. Now, given that we've seen so much volatility in terms of market reaction to central bank comments, what do you make of what Bernanke said yesterday?
Well, first of all, I had been a little surprised as the supposed economists' consent that tapering would start in September, because here's what happened. Bernanke had given a growth forecast, and he said if that forecast materializes, then we will start tapering. But he didn't say whether or not, or when exactly it would materialize, and he can't know, so therefore the market couldn't really think that it would happen. And also, looking at this in the context of other indicators such as pressure from the International Monetary Fund and emerging countries who tell the Fed to be careful with their tapering because it may have negative implications for them and their economies. It's money that would flow out of their economies. I think my sense is that tapering will likely happen next year.
And Sandra, I'm glad you brought that up because earlier this week the IMF cut its global growth forecast, and there were concerns about how a pullback in global growth would impact the global economy in conjunction with the tapering. But I do want to move on to the Eurozone. We had the ECB rate decision last week, and they did move away from tradition in terms of saying that rates would be low for the present time as well as dependent on economic data. But we have been getting some other comments from ECB officials. So what about the other side of the Atlantic?
I think it's a similar scenario to what is happening here. I think everybody realizes we can't go on as we have, and so we need to start preparing the ground for an eventual pullback. But in Europe so far, I think we're seeing too few signs of stabilization. We don't really see a sustainable recovery yet. Unemployment keeps on growing, debt ratios keep on rising, so it's a little concerning, and I think that's why the ECB is still supporting the whole thing.
And moving on to China, earlier this week we got some worse than expected economic data releases, but at the same time there are some hopes that the PBoC could act to stimulate the economy. So what do you think is going on there?
I think China is in a time of transition. Growth has been slowing. There's been a credit crunch, so they need to effect long-term reforms. And the PBoC is giving politicians a little bit of time while trying to prevent a credit crunch. It's a very difficult undertaking, but I think it's doing the best that it can. And I think that generally speaking, they're on the right path. But I think growth will be slow for a while.
And while we're taking a look at global central banks, we've had some earnings come in. Alcoa reported earnings that were better than expected, but they did post a wider loss compared to last year. We did also get the interim report from Chevron, and that did get a little hiccup based on international production. But of course, tomorrow we get JP Morgan and Wells Fargo. So what are you looking for in the earnings figures, and what does it mean for the global market?
Well, I think that we're coming from a very low base, and we've seen most recently that expectations have generally been revised down more than up. And I think in the global context, it's important to look at financial institutions because they're a harbinger for the rest that is to come. And what is interesting also is to see, to take a look at international corporations, because in the past they were viewed as the perfect hedge. If growth slows in the U.S., then still you have exposure to high growth countries like emerging markets. Now that this has been changing, the trend seems to be more back to the U.S., that also American companies see the U.S. more as a safe haven again.
Okay, Sandra, well, a lot to weigh and consider there, so thank you so much for your insight today.
Thank you, Remy. Appreciate it.